Good afternoon, ladies and gentlemen. Matt Leschber here with 1836 Property Management, as always in beautiful Austin, Texas. Thanks for taking the time to dig in this video, giving us a couple moments of your time to help share with you the back end of how things work, what costs are on our side, and in turn to make you a better investor so that you can relate more to your property manager, know better how to shop, and seek a better return for yourselves with all that knowledge. So we're here today to discuss property management costs and the differences between flat fee plans and percentage plans. Really, all this is about the Austin metro area. We serve over 720 units or so and growing in the Austin metro zone. We're not in other cities. And the timeline we're going to be reviewing is from 2020 to 2022, about a 3-year period. But some of the graphs we're going to hopefully share with you at the end of this are really from 2019. So they'll show you an elongated trend. The reason that we're shooting this video is inflation. Inflation has been the topic of everyone. Conversation around the water cooler, on the news, everywhere you go. I mean, everything is going up. We've all felt this, whether it's used car prices, gasoline, groceries, rents, whatever it may be, the costs are going up. As a flat fee provider, our costs have stayed the same year after year after year. We've really not had many price changes at all over the last few years. All of inflation has taken root, which means our labor costs have gone up, facilities, taxes, everything in the mix, healthcare, benefits, everything has gone up. But we've managed to hold that line. As a percentage provider, which the vast majority of property management companies are, those guys don't have to worry about that because as your rents go up, the expense to hire them, the management fee goes up directly in line with those rents. And they love that because they never have to talk to you guys about pricing. It's just there. I mean, you hired us. Don't worry about it. It's there. And neither is wrong. So I'm not preaching one plan over the other. I actually think the percentage plans have more benefits for us, especially. But we believe that the consumer really appreciates, and it makes it easier for them to decide when they have a flat fee price. They just like knowing what to pay. Give me the number and I'm done. And it makes them feel more confident. So we have gone that direction probably, it's been 6 years or so ago and kind of never looked back. With that, however, it is a fixed flat fee. So as an owner, you get to lock in a number today for the next 12 months or maybe even 24 months, depending on what your lease term is. But as a provider, when our costs go up, we have to figure that out. And so usually we're trailing. But that's okay because we're here to serve the consumer. We're here to deliver a better product. We're here to beat the competition, not just be equal to them. So that's fine. We accept all that to a certain pain point. And because of inflation, we're having to have this discussion today. So over that same time, 2020 to 2022, rents have trended up. We can demonstrate in our portfolio over 700 units, a 4.9% annual increase in rental rates. It's been steady. We're going to show you that graph when we get to it. But the flat fee has been flat that whole time. So direct labor, which relates to cost of property managers, not management, not facilities, sales, marketing, et cetera, just the people that handle your property has dramatically increased in cost over that time because labor is much more in demand, right? It's hard right now to get great employees and to retain them. So we have to really pay top dollar, especially in the Austin market, to get great people so that you can get your questions answered. Fuel, software, facilities, benefits, everything's gone up. So using that flat fee model, as we described, prices really haven't changed for us. This has resulted in reduced margins. So what, right? You just want your property managed. How does that affect you if we're not making as much money? Well, those margins allow us to reinvest into continued improvements, development of new systems, to basically serve our clients and better to retain employees so that you're not having turnover year to year and going, who is my property manager? Are they even qualified? We pay for education for them. We pay for meetings for ourselves to continually get better. We are closing out at the end of 2022 on about 3 years of development of an internal software system. There are major national corporations that manage properties across the nation that still don't have a system. But we started this 3 years ago. We actually started looking into it 4 years ago. We started the build 3 years ago. And so that's kind of coming to fruition to us, which means we can deliver a much better service to you. All of this is to say that without reasonable margins, we can't invest in those services, those people, or to build out the service that you desire and you need. So as the bottom line, we're going to have to increase our pricing. There's just no way around it. We cannot keep up with the inflation. We've held back over the last 2-3 years, just saying, hold off, because we want our customers happy. But it would take us an additional, on average, $34 a month per customer just to break even with the gains that all the percentage property management companies have made or have charged you. So if you're at an 8% company in Austin, you're paying probably $34 a month and have been over the last 3 years on average, more so than using us at 1836 property management. So we've got to phase that in over time. We've got to get that money back somehow and at least come back to where we can see above water. We don't have to, try to gain $50 a month and go crazy and get rich, but we've got to get to where we can still maintain healthy margins to keep our people in place. So the big question that I would think if I was in your shoes is, well, I'll just go elsewhere. I'm just going to go shop and I'm going to find a cheaper provider. I'm just going to switch because I don't want to pay any more money. We know, especially with what we call reluctant landlords, folks that didn't want to be an investor. You had a property, you couldn't sell it, the market went down or whatever it may be. Interest rates are too high. So you're just going to hold on to that. You don't like spending money. I hear you. I heard you back in 2008. We were here with you at that time. We get it. The challenge is that we've got to at least lock you in at something so we can deliver great service to you. Because if I can't show up, if we can't pay staff to answer your calls or respond to your emails, I don't know why you'd pay anybody. So we've got to keep up with inflation. The flat fee will get us back to where we can see above water to hit that minimum bar, but we're not trying to accelerate. We're just trying to get back to at least standard. So I would say if I was you that you've got a great place that you're sitting because you've been saving for the last few years. If you're already a client, if you're a new client, you're going to lock in pricing at today's price instead of, hey, well, the rents are going to keep going up and I'm going to keep going up on my price. No, you're going to lock it in at least for that year or 2 years of your contract. So that's a good deal. We also feel that there's a number of reputable providers out there, and there's a few that we know or we don't even know, and we've been here over 16, 17 years, that they're just not going to deliver for you. Now, what does that mean? How are they not going to deliver? I'm going to answer the phone, don't they? Well, not really. Because if they charge that little, they can't staff the phones. Or the worst thing that we see in our industry, which is really not talked about on your end, the consumer end, is they're going to not charge you for repairs for anything. They're not going to fix anything. And they're going to tell you everything is great. And you're going to be super happy because you never have to spend any money on repairs. And in 10 years, when you go to sell that property, you may consider tearing it down instead of selling it because you're going to have to spend all that money again on a complete renovation. The hardest conversations that we have at 1836 are you need to spend money and you need to maintain the property. But by doing so, you keep the integrity of the property, you keep rents up, you keep great renters because nobody wants to rent a place that's falling down. And if they do, well, there's probably something wrong with them. So you get it, right? If you're looking around and you want to compare pricing, feel free. As we've gone through this exercise, we went through that ourselves. We looked at all our competitors and we know these guys at this point. We put it all in a grid and we plotted it to see what they were charging, what they were not charging. And the gist of it is that if you take out all the tricks and gimmicks, we've got to increase our pricing somewhere over the next 3-4 months, around $30 a unit, just to get back to what their advertised lowest price is. I know that sounds crazy, but that's correct. We are $30 less than any reputable provider, whether it's local or nationals, advertised price per month. So we've got to reclaim that at least to be able to maintain great services for you guys. So if you have any questions, please reach out to your property manager. Feel free to email me if you've got any questions because I run stats until the cows come home to make sure that any decision we make is the right decision. But I'm happy to share those with you. Our job is to be as transparent as we can with you, including sometimes with our own internal numbers, because, hey, you guys could sit back and think they just keep charging me and he keeps buying another car. And well, that's not the truth, but you don't know. And so it's quite fair to ask. And we want our staff to know those numbers so that we can be transparent. So we've done the shopping for you. We've looked, we've compared. I'm going to have our graphics team pop up graphic JPEG now, so that they can actually demonstrate to you guys kind of what we're talking about. And I'm going to talk through it now. So what it looks like is if we start back in December of 18, that far back, you'll notice that the green line, which is average rental rates, starts at one point and trends upward. And this is very common. I mean, inflation takes root, rents go up, prices go up. This is normal life, right? This is how the government pays for things in the future that they're giving out today. We all know how this works. The blue line is actually our revenue per unit. Now, don't get me wrong, these are scaled differently because we could obviously never make more money than you guys made in rent. That's just ridiculous. But you'll notice that if we scale these against each other, as we had some price changes back in 2019, it's been that long, our prices went up relative to rental rates, and they grew, and that was all great. Since then, the rental rates have really continued to climb. Expenses, costs, labor, supplies, facilities, materials, benefits, everything else has continued to climb just like the natural economy does, or rental rates. And at this point, we've crossed back over into where we're not really in a healthy territory. So this is the reason that we've got to reclaim that money. We're going to phase it in over the next few months. So if you're considering our services or considering renewing, know that we've already shopped. We've already compared. This is the graph. We've done the work for you. Compared to an 8% plan, which is really common in Austin, you have been saving about $34 a month for years. You're welcome. And don't forget that in the future when it's time to resign. But we're going to try to capture about $30 of that from the owner. So we'll still be below what others charge, even at a percentage plan, and about 5 of that from tenant services. And so we're going to see if we can work that balance. Keep in mind, as rents go up through the next year, if you're locked in 2 years, you're still going to be lower as rents go up than you would be on a percentage plan. So again, thank you for your time. We really appreciate you guys allowing us to share with you the back end of why things are the way they are. Because without that knowledge, there's no way you could feel like you are working with us, that we're on the same page. And we're here to do that with you guys. So don't forget, we've got a bunch of new software coming out. The REA Monitor is up and running for you guys that are owners. We're dialing in the back end. Your property manager is going to be in touch soon. This is a one-of-a-kind product. It's ours. We actually may sell this in the marketplace for our software, so it would go national. But currently, you are the only clients in the nation that have access to your own numbers in real time. We've got a great buddy in Orlando who is high tech as they come, and he even had to extrapolate his and can't do them in real time because the software doesn't provide the open API. So you've got some great benefits with us. We've got great people here. We've hopefully served you for years. And keep in mind, when those maintenance bills come, it's not because we want to, it's because we have some integrity and we actually want you guys to maintain your property and keep great tenants in place and keep that cash flow. If we can do anything for you, answer any questions for you, if you have any comments, reach out to us anytime at wecare@1836propertymanagement.com. Thanks. Talk to you soon. Bye-bye.